Hi fellow traders, I'm making this video to explain possible scenario for buying USD JPY, and we are going to buy if and only if ISM non-manufacturing PMI will either come equal to forecast or better than forecast. If you have watched my previous analysis of USD JPY, I was expecting downward retracement, which happened, and it happened to be not like a slow retracement. It happened very fast because of the negative news about US and China trade deal. Although now the news has been priced in, and some mixed news are coming after Trump said that he will probably be looking for a trade deal after election. Ross and other officials from the US said that there is still the chances of a trade deal with China, and we are moving close to the trade deal. However, market has not reacted to the positive news much, but if you look at the tendency of USD JPY in this environment of US-China trade deal, USD JPY goes down very fast on the negative news, and then it doesn't react very fast on the positive news, but it gradually goes up like this. If you look at this previous move, this was caused by negative news, then some positive news came in, market didn't react very fast, but gradually it went up. Same thing happened here and here. So there is high probability that market will go to the upside from this point, and the reason behind this is not just the previous reaction in this environment, but also the current movement of USD JPY. So let's go back to 1 hour time frame, and there I will show you what happened. But before I go back to 1 hour time frame, I will show you one technical tool which I had used even in the previous analysis of USD JPY for overbought oversold, and that tool is a relative strength index. And as I had stated in my previous analysis, I'm still using the RSI 5, and if you want to know why RSI 5, why not RSI 14, you can watch my previous USD JPY analysis. So anyway, USD JPY on RSI 5 has been oversold, and this is where we can expect upward retracement. So going to the 1 hour time frame, now I don't need RSI, so removing this. Okay, if you look at the current movement on this 1 hour time frame, you will find that the movement to the downside caused by negative revision and negative actual release of ADP and FP didn't stay for a long time. USD JPY fell down, but the move has already been erased in current candle. It shows the reluctance of USD JPY to go to the downside anymore. Therefore, if ISM non-manufacturing PMI will come to be positive, there is high chances of USD JPY moving to the upside, and I will not be surprised if there will be 61.8% retracement of the total move down. If we look at the previous swing on previous swing, then market has not erased previous swing despite the very fast move. Market is still trading around 78.6% retracement of the previous move up, and if you followed my previous analysis, we have made a nice profit on the sell position already, and now is the time to make some profit on the buy position. So when market is just staying around 78.6%, it means JPY is very weak. Comparatively, if you look at USD CHF, you'll find that the CHF gained significantly, way more than JPY. USD CHF made a new low on daily time frame, but USD JPY didn't make a new low. It shows that comparatively JPY is weaker. So going to the upside in USD JPY is more probable than going to the upside um, in USD CHF. And not only more probable, but even USD CHF will go up, but the movement in USD JPY will be more. Other currency which can be looked at is Euro USD, but ADP NFP caused a nice upward move in Euro USD, and that move is still, I mean, Euro USD is staying with the gains, staying firm with the gains right now. The gain of Euro USD has not been erased like it has been erased in USD JPY. Therefore, we are trading ISM non-manufacturing PMI, not with USD CHF, not with Euro USD either, but with USD JPY. And we are trading ISM non-manufacturing PMI if and only if the PMI will come positive. If it will be negative, we will not be taking any trade, because USD has already been oversold in compared to many other currencies. If we look at Euro USD, GBP USD, USD CHF, USD JPY, OD USD, and ZD USD, all these pairs have gained significantly, and there is high probability of correction. Therefore, selling USD anymore in such environment is not suggested. So let me explain the plan, how we are going to do. It's very difficult to immediately place buy trade after the news, so I'll be entering with a buy stop position. I will place my buy stop position 6 pips above, not 6 pips this time. Let's measure what kind of movement is caused by the news. So let's measure this. In previous candle, let's measure the effect to the downside from the opening price. So from this point to this point, it was 11.4. So a movement of 11.4 to the downside was erased. However, this 10 or 11 is not insignificant, so we can consider 10 pips movement to the upside as a signal of buying. So I will place my buy stop 10 pips above the market price right before ISM non-manufacturing PMI release. So if the PMI will be better, buy stop will be triggered, and then I will target 50% or 61.8%. Let's measure. I'm more likely to target 61.8%. So first of all, let's remove this previous Fibonacci to make the chart clutter free, and let's draw a new Fibonacci. These days I am not taking any extended targets on the basis of Fibonacci extension because of very uncertain market movements, very uncertain environment caused by economic data, as well as US-China trade deal. So the trade deal is really a big pain so these days for any big movement. So better to look for smallest movement as long as the TP is bigger than SL. So let's plot Fibonacci here, and let's compare the SL and TP, and if we are going to get better TP than SL, then we can enter the trade. Otherwise we will not enter the trade. So let me draw this. 61.8% is 109.231. So if we will probably enter around 108.74 108.83 or 84, then let's compare where will be our SL and where will be our TP, and how much pips will be there on the table to be gained, and how much pips will be there on the risk side. So I'm just trying to measure from 108.839. Let's measure from 85, because I don't know what will be the price right before release, and accordingly I can't say what will be the buy stop, because buy stop, as I said, it will be 10 pips above the current price. So as of now we can assume, as per the current price, 752. So let's place it to 108.85. So let's say that our buy stop is 108.853, and then let's measure the distance until 61.8% level. So this is going to be 37.7 pips. 37.3 is precisely 37.7. So let's roughly consider it 37 pips, and if it goes down, then we will place our stop loss below the low of previous candle, the candle which was caused due to ADP and FP. So it will be a loss of, if it goes down even after hitting our buy stop, then let's place this from 8.5 level to the downside. Here we are, our SL will be 1 pip below the previous low, something around 108.54. so let's plot this measurer on the chart. Just 1 second. Shift click, and so this is 31.3. It is kind of 1:1 risk reward. Risk is slightly less than the reward. This is 31 pips and the reward is 37. So we can enter this trade, we can take this position. So that's all about USD JPY as of now. Further we'll be looking for a non-farm payroll on Friday. I will come with a new video to explain which pair we should trade for NFP. I will be mainly focusing on 3 pairs for NFP. Those 3 pairs are Euro USD, USD CHF and USD JPY. So I will make a video by comparing all these currencies with their further development in upcoming days. Thank you for watching. Have a nice, peaceful American session.